Hey folks, it's Erica again, and it's nice to have you back on my YouTube channel. Today, we'll do pullbacks in trading. We're gonna cover the types of pullbacks and how they are useful for making money. Meanwhile, we will open a few trades and try to earn some money. So, make sure you watch this video up to the end. In the description below this video, you will find a link to my Telegram channel, where you can ask me any questions you have. Besides, you will find a link to my private Telegram channel there, where I share my daily trading signals. Send me a direct message in my private Telegram channel and get my personal link to PocketOption registration, which will give you a 50% bonus to your deposit. Now, let's go to PocketOption and let's go trading. We're entering the trading chart and I already see an interesting signal, so I immediately opened an up trade for 1 minute with $300 in. I saw that after a small correction, the price began to rise again, while the line of the Williams percent range indicator was also growing. And this became for me the signal of a possible increase in price. Now, I will tell you about today's trading session. So, we will trade on the Australian dollar Japanese yen currency pair. The time frame is M1, that is, each candle on the chart is equal to 1 minute. As always, today I use 3 technical indicators. They are the Donchian channel, the Williams percent range, and the Arun, while their standard settings have not changed. The trading amount today will be $300, which is only 3% of our deposit. So, the risk of losing money, of course, is there, but it's minimal. And now the first trade's coming to an end, and it brings us $276. Now let's talk about pullbacks. Pullbacks in trading are called corrective movements against the main trend of the price. At the same time, there are different types of pullbacks. For example, there is a shallow correction, that is, when we have a small movement, less than 50% of the previous movement. There is a normal correction. This is when we have a movement up to about 50% of the previous movement. Also, the correction is deep when we have a reverse movement that is more than 50% of the previous movement, right up to its beginning. Let's make a pause and open a down trade for 1 minute with $300 in. Once again, we see the coincidence of the price movement with the Williams line. So, since they are going down, this gives me a signal about a possible continuation of the price decline. We will soon find out whether I'm right or wrong, but for now, we will continue the conversation. In addition to differences in magnitude, corrections will also differ in time. For example, corrections can be long. In this case, we will have a movement that will be in the framework of consolidation, sideways movement, for a very long time at certain levels. And also the correction can be fast. This type of correction is the exact opposite of the long one, since with this type there may be a movement of only a few candles. Let's look at our trade. Its time is ending. And there is a profit and we have earned another $276. I would like to talk about one feature of pullbacks. If there is a correction of up to 50%, then the probability of further trend movement is very high. But if there is a correction stronger than 50%, then accordingly, the probability of further movement towards the trend is very small. Based on all this, we can draw a logical conclusion that the deeper the correction, the less likely it is to move further towards the trend. In this case, the deeper the pullbacks, the greater the probability of consolidation, or so-called sideways movement, and there may even be a trend reversal. And how to determine the moment of reversal or the moment of the return of the trend to the main direction? To do this, I suggest using the trader's active zone. This is an area of buying and selling on the chart, which traders use to identify immediate or intra-trend reversals or risk corrections. In order for the active zone to form, we need 2 moving averages, the moving average indicator. We place 2 identical moving average indicators on the price chart, but at the same time, one has a 10-period setting, let's call it simple, The other indicator is configured for 30 periods. It is called exponential. The space bounded by these two moving averages is what we call the trader's active zone. If the price falls into this zone, it means that it is a pullback of just the magnitude and duration that we need. Why exactly has the period of 10 and 30 candles been set? It's simple. If the price does not reach the 10-period moving average, then the presence of a pullback is not considered at all. If the price falls below the 30 period, then there is a high probability of either a protracted correction or a trend reversal. Now, I suggest to return to trading. The price has fallen, but I am opening an up trade for 1 minute with $300 in, because having reached the bottom point, the price turned out to be at the support level, which it has repeatedly pushed off within 17 and 37 minutes ago. In addition, the Williams line is moving up, and this is a signal just about a possible increase in price. While the trade is in progress, we will continue to analyze the corrective movements of trends. It was noticed that it is in the active zone of the trader that most of the reversals occur, and this is why we need to trade pullbacks. In addition, simple settings focus our attention on the desired area of the chart, and thus help us to quickly identify the necessary signals for trading. Let's go back to the trade. It is already being completed, and again brings us a profit of $276, but this time the margin was minimal. Moving on, I want to note that it is not necessary to consider the moving average as a pointer to open a trade, only as an area where the pullback should turn towards the main trend. And when this happens, we look for support and resistance levels, trend line, candlestick patterns, etc. That is, it is necessary to find several confirming signals in the direction of the trend and only then open a trade. Let's pay attention to our price chart again. The price, starting from the lower limit of the downtrend, is steadily growing, and we will follow the trend and open an up trade for 1 minute with $300 in. Again, in addition to the price growth of the chart, I also saw a growing line of the Williams indicator, and as you may have guessed, this gave me a signal about a possible price increase in the near future. Let's wait and see, but for now we will continue. Almost all successful traders try to buy this or that asset, and during corrections, traders are waiting for the market to move down, for example, and in the expected consolidation zone, they will monitor the price behavior in the trader's active zone. Eventually, when the conditions described above occur, the trader will make his analysis to open a trade. This principle of pullbacks does not depend on the direction of the market as a whole and works in any direction equally. Now I see that our balance has been replenished by another $276. Excellent. I suggest we consider another strategy for trading on pullbacks at levels. And support and resistance levels are our focal points. By trading levels, a trader can trade a pullback from a level or a breakdown. It is best to work out exactly the pullback from the level. The levels on the chart are not difficult to determine. In history, all movements and pullbacks around the level look obvious, because the levels become clear, just because of the pullback movements. A pullback near the support level is a signal to open an up trade. A pullback from the resistance level is a signal for a down trade. Let's go back to trading. Open a new down trade for 1 minute with $300 in. This time, the line of the Williams indicator reversed and began to decline. As you can see, the price also declined, and in its entirety it was just a signal of a possible downward movement of the price. Again, we can only wait, because after opening a trade on binary options, it is impossible to influence its profitability in any way. Despite the simplicity of binary options trading, most of the time the market will not behave the way you want. For example, you wait for the price to test support before looking for an entry point to open a trade. But somehow the market knows what you're trying to do and does not behave as you expected. That's why you should have several options to open a trade. And our trade is again profitable, and we made $276 and they were added to my account. This concludes our trading session. Let's have a look at the results. Today we made 5 successful trades within 10 minutes and earned $1,380. And as a result, we went over the features of strategies for pullbacks from the main trend. Sure thing, sooner or later the correction ends and either moves into a further trend movement or into consolidation, that is, into a sideways movement. There are various techniques for finding corrections, studying them and waiting for them. By and large, the whole industry of trading is based on making market decisions, and we have only scratched the surface. I do hope the information you got today will help you make money on binary options. At the end of the day, it's only practice that can teach you to understand the market. That said, if you're not experienced enough, it is essential that you carefully assess the current market situation before entering a trade. By and large, I recommend you to use indicators whose signals you can read, for this helps reduce the risk and make a profit in the long term. I would like to encourage you to keep trading binary options because, as we can see, the analysis techniques are super simple here. And before we say goodbye, in the description below this video you will find a link to my Telegram channel where you can ask me any questions you have. You will also find a link to my private Telegram channel there where I share my daily trading signals. And there is more to that. If you direct message me on my private Telegram channel, you will receive a personal link to the PocketOption registration that will give you a whopping 50% bonus to your deposit, and that's for free. Now, dear friends, this is a pretty nice offer. Well, thank you for being with me all this time. I hope you enjoyed the video, and if you did, please give it a thumbs up for the YouTube algorithm. Subscribe to my channel if you haven't done so yet, and smash the notification button so you don't miss a thing. That's about all for today. Good luck in the market. Take care, folks, and see you soon in the next video.